Hello, everybody, and welcome into this week's episode of the Magnify Wealth Podcast. I'm Cameron Gannon, here with my co-host, Scott Gannon. And this week, what we're going to be talking about is why is life insurance a recession-proof asset? We talk about it all the time, but now we're going to talk about why. So, to start us off, we're going to talk about, or remind you guys what is high cash value, dividend-paying whole life insurance. Do you want to take us off here?
Yeah, sure. So the type of coverage or the type of insurance policies that we use are designed in a certain way, and they are what we call participating policies. So they're high cash value, dividend paying. That's where the par comes into it, or the participating is you get to participate in the excess profits of the insurance company with the dividends. So in addition to dividends, of course, you have your permanent lifetime, that is your whole life insurance coverage, as well as that growing cash value. Now, these can be developed in certain ways or structured in certain ways. And the way we do it is we want to minimize coverage and maximize cash starting off. The reason why we do that is because we want as much liquidity as possible as soon as possible. So that's the kind of policies we.
And of course, along with that comes guaranteed growth with the cash value, as well as many tax advantages.
Yeah, and the tax advantages obviously is, like we always say, is, use your after-tax dollars, whether that's inside your company or outside, and never deal with the tax again.
Yeah. So why is this recession-proof? Well, recessions are uncertain times, of course. The markets are all over the place during recessions. We see a big crash, and then we see a whole bunch of what the heck is going to happen now. Well, whole life insurance comes with stability. There is guaranteed contractual growth within the policy. Dividends add an extra layer of protection because they aren't guaranteed, but over 100 years that these things have been in place, they don't miss dividend payments, so they are constantly adding to that cash value above and beyond the guaranteed.
Yeah. So what insurance companies do with this is when they invest the capital within what we call par fund, or in that dividend paying fund, is they set what's called a dividend scale interest rate. And what that means is they position the dividends to be stable by when they exceed their dividend, that is a store of capital for when they don't. So if they're below, if the dividend is say 6%, and one year they make 9%, they don't just pay out 9%, they still pay out the 6, or they may increase it to 6.25 or something like that. And then in another year that it's 2% or 1 or 0 or anything, they'll still pay out the dividend that's committed to. So it's all about consistency and stability no matter what environment you're in. And frankly, they've been doing this for so long, they kind of know that recessions happen, market cycles happen, and they position themselves to be able to be stable during those times.
And what else? Well, they provide liquidity in times that you need them. So when recessions hit, a lot of times people are like, where the heck am I going to get money? Because maybe you lose your job, maybe you have a loan call, whatever it is. Mm-hmm. You can borrow on demand against your cash value, or you can withdraw it. We never tend to recommend that, but you can always access your cash on demand, and that is contractual. That privilege can't be taken from you, and it's going to be there in the times that you absolutely need it.
And the cool thing about the loans too is they are unstructured. What that means is no payment requirement or due date. So when you are in that uncertain time, maybe you do have someone loses their job, or business is really bad because the business that you run is not recession proof, you can access this capital and essentially ignore the debt attached to it until your times turn around. So it's the ultimate emergency fund that way, especially within people that own businesses and have that exposure, which most businesses do have exposure to recession.
Yeah, I like to call it your defensive asset because it is predictable. You know what it's going to do. It's going to be there if everything goes awry. And your other assets are going to be your offensive ones. Those are going to be the ones that have some uncertainty involved with them, but that you're really going to expand and multiply your overall wealth picture.
Yeah, and that could be market investments, that could be your own business, that could be other businesses that you're investing in, and real estate. However you're set up, whether that money is in a registered plan or outside of a registered plan, we don't those are naughty words around here, but but you get the idea. Like generally, people take risk with their investments, but this is a savings product. Period.
So on the note of savings, it also provides protection in the form of having that savings, that liquidity, and it also comes with a death benefit that gives you peace of mind if something happens to you and not something to the overall financial market.
Well, exactly. Your family is protected, and that's just it. I mean, life insurance is life insurance. If you have a family, if you have obligations of any kind, the responsible thing to do is to have yourself protected that way, and this, that's an added benefit. And actually, the number one benefit. It's just good knowing that everything is protected.
Yeah, and I mean, you also get the peace of mind knowing your money is growing every single day.
Yeah, every single day. Yeah.
But also, along with protection, you're positioning yourself for opportunities during recessions. We talked a few weeks ago about black swan events. Black swan events are times when there's a crash or uncertainty or something somewhere in a global market or local market. And what happens is a lot of people are going to be worse off, but there's going to be opportunity to really take advantage. And by using whole life insurance, you can position yourself to be ready to take advantage of that opportunity.
Yeah, this goes back to the black swan events is when people are running for the gates. That's usually when there's opportunity. And in recession times, it tends to be negative economic environment, and people are just in protection mode. There's opportunity everywhere when that happens. And the people that can take advantage of that are the people that, number one, their money doesn't go down, but also it's liquid and available, period. And it's a great asset to do that with, because even when you take advantage, and again, we talk about multiplying your wealth or magnifying your wealth, this is it. This is, I still have my money growing every single day during this awful event. And you sit there and wait, where's the opportunity? Oh, there's an opportunity. And now you're just creating more dollars by leveraging it out and using that on contractual, unstructured loan provision.
Yeah. So let's talk about a few things to consider when utilizing dividend paying whole life insurance. First off, you need to have a long-term view with this. This is not a get-rich-quick scheme, if you will. This is positioning yourself to reap very good long-term benefits.
Yeah, I mean, like we said earlier, or like I mentioned earlier there, I mean, we design these things to have a tremendous liquidity early on, but that isn't really how you get ahead with this asset. The asset gets better with time. So every single day you keep this in force, it gets better. So what does that mean? That means if you're thinking long term, it's a great asset to have. If you're thinking 1, 2, 3 years into the future, this ain't the thing for you.
Next thing to consider is make sure you have the right coach behind you. You need to have someone that knows how to design these things properly and then coach you along, because we're not inherently able to know how to participate in infinite banking. You need to be coached along by someone that's an authorized practitioner.
Yeah, I mean, this is out of the box thinking, and most people aren't aware of it, and they actually need to be educated on why this makes sense, for the simple reason that it is, as much as it's growing in popularity, it's still not there. It's still very much in its infancy as a concept.
And finally, who benefits most from this? Well, anyone can benefit that can start contributing cash or has cash savings that can be contributed. Of course, it's it's fairly linear in that the more you can contribute, the more you will see the benefit.
Yeah, I think we talked about this before. We said that basically what you're doing when you're practicing infinite banking is creating a separate business of banking. And when you're in that position, when you think of what banking really is, banking is lending money. And the more money you have to lend, the more you can make profit. So I've used the paint store example in the past. So same idea as if you knew you had unlimited demand for a product, then you'd want as much inventory as possible. What does that mean in this context? Is as much free cash flow or capital that you can use to place in here. It makes a lot of sense. If you're insurable and on a favorable basis, then or somebody is that you can connect to or insurable, this is where a lot of this money should go, for the simple reason that it's available. It's available like cash, and only better because it's tax free and leverageable on demand. Period. That goes back to the old thing I used to say a lot to clients. I don't care what you do with your money, just give it to me first.
All right, guys, that takes us pretty close to the end of this shorter episode of the Magnify Wealth podcast. Remember, Dividend paying whole life insurance is a powerful tool for financial resilience, financial growth, as well as flexibility when recessions inevitably hit, because they hit more often than we've always been told.
It works for emergencies, works for opportunities. Those are two things that have huge impacts on your financial position if you're not prepared.
Thanks for tuning in, guys. Please do leave a like, share, subscribe, do whatever else is down there in the under the video.
5-star review would be nice.
Yeah, there we go. Have a good week, guys. See you next week.
Thanks for tuning in to the Magnify Wealth podcast with Scott Gannon. Remember to subscribe on YouTube or your favorite podcast platform for more insights on the infinite banking concept. Until next time, remember, immediate action is the most efficient way to achieve your goals.